Hey, good evening, guys. Ken at Tortoise Capital with the nightly strategy podcast. A lot of stuff to cover today. I hope you heard the one yesterday or talked about at the end. The closing remarks, which I will reinforce again today, was that the big run up on Tuesday was not the sign of a bottom being put in. It was just simply a technical bounce from things that had been smashed on the seventh worst day in the last 20 years on a percentage basis. So naturally, there would be some algo buying, and then today they all got wiped out and more got slaughtered once more today, and all the usual suspects. So we're going to see how the primary targets all fared. I just wanted to back out on the time frame a little bit. This is almost like this is the multi-time frame, multi-lens analysis. So I just want to start this off by looking back in time. Now I'm on monthly charts here, and I want to show some previous big sell-offs and whatnot. So this is monthly charts, and so this is the belly of the dragon from back at the bottom of the financial market sell-off here in housing market collapse in 2008, 2009, the belly of the dragon. This one is that green dot is where the recovery had occurred enough so that two things happened. Number one, you'll notice that the RL10 crossed over the long-term fair value, the RL270. So that's like the RLFF, the regression line fractal framework, but looking at it on a monthly chart. So we said that was sort of an evidence of that. Also happens to coincide with an emerging dragon. So if you look at this blue line as sort of that price level, and then you come back over here to the previous peak in 2008, which occurred from, let's see if we can go back any further. Yeah, so 2008, and then the peak of the internet boom was all with the S&P at about 150, and then you had the let me draw this so you can see follow the bouncing ball. So you had the tech market boom, then the sell-off of the internet bubble bursting, the grinding bull that took it right back to the previous double top high, and then a massive sell-off of the same magnitude during the housing crisis. Deeper, sharper, shorter duration, and then the explosive move, and so the recovery back to the test of that 150, and that's where the RL10 crosses that RL270, and instead of failing and staying in this channel, it puts another leg in and goes up to 220. So that's a 50% gain from this double top, and then there was this hesitational sell-off, and then the second leg up, which culminates around 300 or 330. That's another 50% gain from that previous consolidation zone. So this big long red line here that's that double bottom. This was the double top of the previous channel, and then the breakout in 2013 and that recovery. Then the Trump sell-off in 2016, and then the Trump magnitude of this move from about 200 to about 340. Right. There was one additional sell-off in here around, and that's the impeachment, right? Start of the impeachment. So that's what this blue line. This blue line here represents the belly of the dragon. That's the next, one of the next big targets on the way down. So that's at 200. So I just want to put some of that into context. When we look at the weekly and zoom in, so now you can see that's that big long. That's where that green line or the RL10 crossed the 270 on the monthly. And then here's that move at 200. That was the first leg up, and then the belly of the dragon over here on the monthly. Now, when we're looking at the weekly, you can see the magnitude of the move again here from about 340 and now we're down here at 270. So that's $70 off at 350, which is about a 20%, a little bit more than a 20% sell-off. All right. And now back to the daily. So today's price action. Let's pull this over a little bit so we can see. Okay, so just looking at the 10, 20, and 30-day look-backs, this was today's price action here. The opened was a gap down and then a harsh sell-off, and then made a new 10 and 30-day low and then closed just above. So that's what today's price action looks like. So that's the, the auto framer entry and short here. This big thick red line, if we go back and look a little bit further, is the Z3 excursion from the last, 12 months look back. That was so back when we were here, a violation below there would have been seen as an extreme, and we're right near that right now. Then the next lowest one came from a weekly bar, and then basically have the belly of the dragon right here. And then this one is also a Z3 excursion so far. So the 10-day range, here's the 10-day high and 10-day. So the 1, 10, and 30-day lows are all the same. That's a trigger to go auto short. We are just below 20% on the sell-off here. We are deeply in the winter, and now that's at minus 23.22 on the MACD line. Monday's open, 274. This one here, let's so you can see that. And price is now below Monday's open, so that's now officially weak for the week, if I may say it that way. The price ladder on the way up, so taking out the daily high. This is the skin of the dragon, the spine of the dragon, the top skin of the dragon. This one is the 10-day high. I'm going to make that the PSAR. I'm going to put the PSAR flip. This is the Bollinger Band mean, the fair value, and the RL70. This green line is the previous peak of the RL270. This is the hump of the dragon. This one is the peak of the RL10. And this is the 30-day high. And this was a Z3 excursion over the last 20 days or so. Kind of that Z, that should really be a little bit higher there. So the Z3 excursion. And now we're right at that 20% sell-off. So just not looking good. You'll notice everything's, we'll go by the, here's the S&P. So everything north of the S&P was better today. Volatility, the S-Dow, the inverse oil, gold and silver, Alcoa, Aussie dollar, Tesla, natural gas, Japan, Apple, healthcare, Walmart, tech, materials, and then on the worst end down here, Boeing down 18%, UDow down 17%, Virgin Galactic minus 11, Win minus 10, Brazil minus 9.5, U.S. Steel minus 9.5, Simon Property Group, the commercial real estate, United States minus 9. That's going to continue to suffer because a lack of economic energy here, and so the real estate's not going to be paying off. A lot of businesses are going to be out of business. The small ones that are renting, which gives you commercial rent, and then nobody to replace that. So that's going to really get smashed. Let's take a quick, you can see why I should already be short this. Doggone it. Clean energy, because that's sort of can't afford it. That's part of that problem. Yeah, so that's we are short that one in here. Simon Property. Yeah, okay. I didn't have the drawings turned on, so sorry. So we are short Simon Property Group from here, and got our stop down there. So we covered that in the speed run. So that's just a quick look at the sectors and the way they performed today. Let's go to the case studies. So again, here's just a quick look at the performances today, all the usual suspects. Yeah, so this is VXX series today. It mucked around till about 11. There was just not much traction on it, and then we got a Z3 breakout. I finally pulled the trigger here. Made bank. Tried the inverse. Made bank. Again, I'm just getting one period shorts and really using the MACD histogram seasonality to get going. Like, there wasn't enough in this area here to do anything. Oh, sorry. There really was not enough in the early segment in the MACD histogram because of the magnitude of that gap. It took this long for it really to start developing signals. So that's what I'm kind of waiting. And that was really the first excursion away from the VWAP. So we got a bite long, a bite short. Then this is, I consider that an owl, because now you have an unambiguous move from here to here. P1, RLXD, dragon rolling up, 30 rolling up. There's the owl entry, a pocket continuation, and also an emerging dragon when it takes out the high here. Getting paid on 2 scoops. I still have a short side bias, so I want to go long volatility, so I'm ignoring these. I wait for the second pocket, and I have a low and a higher low in the dragon, and it's an emerging dragon, takes out the 2 humps of the RL10, so I buy it, get paid on a leg, hold support, buy one more, cash the RLXD. So pretty well in tune with the volatility today. Let's see. Keep my pointer. Okay, so this one is S-Dow. So this is the triple inverse diamonds. Gap down opening raises, or I'm sorry, gap up opening raises up. About 45 minutes in, so this is like a quick frog-ish. And then a Z3 pinch breakout above the VWAP, which was rising all day. So that means all of this had considerable volume. Now notice all the good volume up in here. So that's what's pulling that VWAP intraday up. So we get the owl and cash. I had other things going on right here. I wasn't interested in the inverse so much today. Another owl entry and cash the first leg RLXD. Continuation and scratch. Continuation. On a better day, I would have exited and re-entered here, but I was pretty deep in the money, and I just had a belief today, betting on fear, and then cash well before the close of the market. So that's S-Dow. Let's see. Next one is Boeing. This one was the no-brainer. I mean, it's just getting smashed. The only people buying airline tickets are young people. Said, if it doesn't kill me, at least I get a good airplane price. The fatalism of youth. The invulnerable. So this is a hybrid frog short. Second position on a collapsing dragon and cash. It rejects the VWAP and then in the pocket and front running this collapsing dragon. So I'm short. 2 more legs and break down again. Another collapsing dragon. Second position short. Long Z3P. On a better day, I'd have been short here on that first excursion. I just waited, and then it crossed below the RL270 for the third position, and then into this collapse, and then an RLXD, so cash, and then flat before the day is done. That's Boeing. Be more of that one coming. This one is Virgin Galactic. This is the poor man's Tesla, and it's cracking left and right. So collapsing dragon below the RL270 and the VWAP, which are decaying. So short on the next collapse, short, and held as long as I could, then covered. So scratched the second one, made bank on this one. It comes up, tests the VWAP, and then starts failing. So short in the pocket, hold through the congestion, which is decaying. And then it crosses below the RL270, second position. The big gap sell-off, and then starts to race back up. Felt like value buyers, so just cash again in the late afternoon. Love this one. Brazil, the usual suspect. You just can't get any more ordering. Hybrid frog short, second position when it gets another leg down. Collapsing dragon, third leg down, fourth leg down, and just couldn't stand it anymore. Cash just in time to miss this, and I didn't have any will left at 3. I was looking to reduce exposure, and I didn't think that was. I mean, how much? It was already down 10%, so I missed all that, and then I can't trade this very well at all. And that's just the VWAP magnet. So here's the argument for the VWAP magnet. If you have time, will, pattern, and money, I just didn't have the will. But here's the pattern. You got a Z3 excursion, a belly of the RL10, and then a belly of the dragon, then a higher low in the RL10 and the dragon. So you buy that little pocket when it crosses the RL270. You get that at about 28 and a quarter with the stop below the swing low of 28. So you get a 25-cent entry execution risk, and you could reasonably close that around 29 and a quarter. That's 4 R of execution, which is a daily or weekly R. So that's the reason to pay attention to the VWAP magnet. I mean, the magnitude of the move from the RL10 to the VWAP is just considerable, and that's just how much the traders were able to move it today. So that's that. In the daily report, you're going to notice that everything is on a on the auto framer with some amazing swing trade reward to risk ratios because of the nature of this market where we are so deep into the risk Z winter. No swing trades unless you paid for it and it's a defensive play. I even got out of the Walmart swing today. That's my brother calling long distance. That might need to take that. Hey, Bill, I'm on a webcast. Call me back in 30 minutes unless this is an emergency. 30 minutes. Thanks. So you got like some 8-to-1 reward to risk ratios like oil and energy and Caterpillar, Dow. The reason I like looking at this is to kind of see which ones are suffering the maximum pain from their 10-day high. So you can see that's that whole energy materials, the Dow, and JP Morgan is in there. You find EWZ down here at 3.5-to-1, and UDow at 3-to-1, and that takes into account, remember, the size of the daily range is the denominator, so it's sort of a volatility adjusted measure of reward to risk. And then you can see over in these columns the what sometimes we're using the range risk, sometimes the max ATR risk. In these cases, the range risk is greater than the max ATR risk. Like a 1 ATR in just Boeing, we're just going to take a look at that. The range risk is $40. The 1 ATR is $20. So it was a 2 ATR move in Boeing. So all these that you are using the max ATR is because the range move was bigger than the ATR. Okay, so that's how you read that. So let's go to the speed run real quick. Where are we at here? Let's see here. Tools. want to try a thing where I'm see how many seconds. This is kind of like showing off, I guess. I don't know where we're at. Okay, so I'm going to try to characterize each one, and it's only about 7 seconds on each one. So I'm going to try to just classify what I want to do on each of these in 7 seconds. So short in Alcoa, keep it. Apple, I'm stalking it as a tech leader. You got to own someday, but not now. Aussie dollar, I'm out of this position here. We're short 2 in Boeing and staying that way and move the stop down to here. Caterpillar, I'm short 2 positions, move the stop to here, and I'm in the money. The Canadian gold and silver is holding up pretty well. It's better than Wheaton. Cliff, short 2, move the stop to here. Timber, we're short 2 positions, move the stop down to here, add a 3rd position short there. That's diamonds. That's all the intraday markup, so you can ignore that. Devon Energy, we're short 1 from here, and we got to move that stop down to about here. Emerging markets, short 1. We're down in here, so let's move our stop and lock that in. Add a 2nd position if it breaks below. Short 1 today in EFA. Started that one today. There's our stop. Japan, I'm just stalking it. I know that without even looking because it's there's other better ones on the short side. Mexico, my internet connection is pretty slow here. So Mexico. We're running behind here, so we're going to turn off the slideshow. It's no good making commentary if you can't see the chart. While we're waiting for this thing to reload, the idea behind that idea of the slideshow is really just, can I make a snap judgment and decide what to do, in 7 seconds? And if I can, then then my screen is showing me what I need. Come on now. Slow internet connection here. So all I'm going to do is just simply say there's no other surprises in the rest of these. They're all collapsing. And I don't know why it's taken so long to reconstitute these pieces. There we go. Okay, thanks. Let's try the drawings once more then. Okay, so we're back into Mexico. I'm trading that just intraday. The swing short, the better one, is Brazil. I want you to notice that Brazil was down almost 10%, Mexico only 5%. So I prefer Brazil on weakness right now rather than Mexico. More political instability, I presume, is causing the grief. Yeah, there we are. There we go. So there's that's the short from today on the swing, and then I'm going to move my stop down to like in here. Home Depot had been the strongest one, and I got short on that one today. Russell got short today. U.S. real estate. I thought I'd gotten short in here. Oh, it's not showing. McDonald's. We're short one from here. Still short. Clean energy, I don't think is. I think that's a luxury, and so we're short that one from here. The we're long one in the triple inverse. I move my stop up to the 2-day low from here. I had been contemplating a second position here, but the gap up just seemed too much, so I haven't put a second position in. I will add one, though, now if it goes above the 2-day high, because then it feels like the trade war is on. But meanwhile, I just want to kind of lock in that gain. Let's see. SPCE, that's the Virgin Galactic. We kept a piece for that and paid for the swing short. Simon Property Group, this one we're short too. And my stop is here, and I will add a third one on that one if it violates. Treasuries I think got smashed again today. So this one is odd because I think it's just there's so much buying in treasuries that the yield is getting smashed, and so it's given up some of the the pricing power on it. But that's if we go to negative interest rates, we may hear that tonight from the Orange Man, and that would be bad for everybody owning treasuries for income. Tesla continues to suffer. We're short one from here. So I will add a second short in Tesla if it goes below the swing low right there. And I'm going to move this stop down to here. Natural gas wasn't bad yesterday, but today gave it all back. I'm not in it, but I'm just watching some of these alternate choices in energy. Oil stabilizing down here, but it was an inside day but closed weaker, so I think there's more downside there. The volatility pieces are just working their butt off. Wiz, even if they're in defensive mode, they still got smashed today. They're done. Walmart, it gapped down, and then I wanted to lock in the gains at the edge, at the skin of the dragon, and it closed poorly. It closed poorly. So that run is done. That's a nice swing trade for us right there. Wheat and precious got short because for some reason gold is suffering, and they're worse than the that Canadian piece. So I just got short here today, and my stop is up here. And I moved that stop down to here, so I'm no lose plus dinner for 2. I just, in my spider senses, that it should be working, but it's not. Win is they're just doomed. We are 2 positions short, and it's getting better. Let me get this out of the way. So here's 1 and 2 short, and let's move our stop down to like here, and I'll just add a third position if it fails below that line as an alert. U.S. Steel was down 9% today. It's below 6. Remember that was my buy it at 8 with a $2 stop because coronavirus is going to rebuild the U.S. industry. I was probably 2 years early on that one. So what are you going to do? And it closed at 5. It's closed at right at 6. Materials, 2 positions short. Energy, 1 position short, and it's continuing to suffer. Finances, I was just stalking. I considered getting short inside here. A second entry, I'm short 1 from here. So we're deep in the money, and let's put our stop in place here. So if he announces something massive, that could change everything. What can he say that makes a difference? You can't bullshit a virus. Viruses don't have social media, so what's he going to do? The only thing conceivably worse than him is Biden. Oh my God, dead man walking. So we're 2 positions short in tech and healthcare, just mucking around. So that's the quick speed run. Let's look at the daily report finally. Appreciate you guys hanging in there, doing a great job. So, you've seen the health check. massively oversold everywhere, bearish, volatile, deep in the risk Z. I mean, you're really nothing else to say. 10-day max pains. These are the ones that are suffering the most, and and these are the ones in the S&P 100 and the ETF 100. So that's energy, UDOW, oil, and XLE. Everything's 5-day down. Everything's massively oversold for the auto framer. In the sharp red, these are the ones that made new lows for the look back period. So like Dow Chemical, Boeing, and United Tech all made new lows for the 10-day, 1 month, 3 months, and 6 months. So that's how you read that. Pfizer getting smashed. Same thing over here. Just look at the percentages of the energy sector, down 50% in the last 1 month and 3 months. Holy smokes, just getting crushed. Only treasuries above the north of its river, and look at this. And these are the best ones. Pfizer is only at Z-2, and it's one of the best. And then the worst things like energy, it's 6 sigma below the Bollinger Band mean. That's just how bad this thing is. Obviously no pinches. Lots in the auto framer to be stalking for later. The regression line fractal framework. The deep value plays. It's all energy and financial sector. No squeezes. Everything's in the winter. Horrible sell-offs in every dimension. Only United Health and Walmart had anything like reasonableness. And even gold got smashed today. Look at it. It's the leading candidate among the ETFs on the 10-day range, but then got smashed today. So, I mean, where's the safe haven? None. How sharply down the 30-day regression line is, that's at about -4 sigma. The stretch is horrible. The worst RL slope in the last 10 years by far. And you can see the volatility hasn't even slowed up. The 10-day slope got a little better because of the 1-day resell, but then the fact that it failed again ain't helping. I just want you to notice how important it was to pay attention to the peaks in the RL30 when they rolled over here, couldn't make a new high, and the 10 peaked, and the 90 was rolling over. If you go back and listen to those weekend reports, you can hear us talking about how to make sure that you've locked in your stops because of the extended move on this Trump bump right here. So that's everything I want to cover for today. Plenty to chew on. Be ready for tomorrow. Be well rested. Drink a lot of water. Get your exercise. Eat well. Rest. Minimize your travel. Please take good care. Good to see Joe there. Keep working hard, bud. Proud of you. Send me your questions by email or in the chat room. Guys, take good care. I'll get this produced and then hung in on Patreon just as soon as I can. But you got the reports are already on Patreon and in the download area here as well. So take good care. Remember what's important. Take care of business. Keep marching.